Hello students, today we are going to start chapter 4 of macroeconomics, that is measurement of national income. In this chapter we will read about the measurement of national income, its process in various methods. There are three methods to calculate the national income. All these methods are based on the circular flow of income which we have read in chapter 1. Under that, there are three stages of circular flow of income: the production stage, distribution stage and generation stage. So, in production stage, when all factors of production they contribute, that is from the household sector side, they contribute for the production activities, then the income which is generated through these is distributed among the factors of production, and further in the last stage they make the expenditure, and again the circular flow of income goes on. For more clarification, you can watch my video related to that chapter. So, in this chapter, let us have a understanding of measurement of national income through first method, that is value added method. Value added method is based on the first stage, that is the production stage. Now, in this production stage, all factors of production they contribute to the production activities. So, contribution of each producing unit in the economy to the production process is to be valued. Now, here in this method, value added is to be calculated for various sectors, and that various sectors in the economy here means we are having three sectors in the economy: primary sector, secondary sector and tertiary sector. The income generated, that is the value added to all the intermediate consumption, is to be added for all the sectors to arrive at gross value added at market price, or it can be said that GDP at MP, that is gross domestic product at market price. The formula to calculate GDP at MP or gross value added at market price through value added method is value of output minus intermediate consumption, where value of output is equal to number of units produced multiplied by price per unit. As per the information available in the question, we have to arrive at the value of output. If the information is given of a different type, that is if total sales is given to you plus change in stock is given to you, then we have to apply this application and value of output will be calculated based on this. Then if value of output of different sectors is given, that is sector A, sector B, sector C, or firm A, firm B, firm C, then we have to add all these to arrive at value of output. Here it is important to note that change in stock is equal to closing stock minus opening stock. We have to keep this in mind, that change in stock will be equal to closing stock minus opening stock if both the values are given to us. So, by this we will arrive at the value of output. Now, second head is the intermediate consumption which is required. Intermediate consumption means if we are purchasing the raw material of any such firm which is the output of that firm, as we have read the concept of production boundary, then such raw materials are to be included. We have to add fuel, power, etc. if given, which will be utilized only for once, as we have cleared the concept of intermediate goods and final goods in the previous chapters. So, I think this should be very clear to you. If not, then also watch the video related to intermediate consumption, that is intermediate goods. So, here to find out the intermediate consumption, we will add raw material, then other intermediate consumption which will be included and raise the value or help in the processing of raw material, that is fuel, power, etc. It will be added. If any other kind of raw material, say for producing of furniture, we need wood, it will be a raw material. We need nails, it will be a raw material. If electricity is utilized, it will be a raw material. So all kind of intermediate consumption is to be included to arrive at the value of intermediate consumption. Then when we will deduct intermediate consumption from value of output, we will arrive at gross value added at market price. If in the question it is asked that we need to calculate the national income, then we will have to prepare the formula. National income means net national product at factor cost. We are having the value of value added. By applying this formula, we have calculated that. We will deduct depreciation from this, so that now gross will be equal to net. Then we will have to add NFIA, that is net factor income from abroad, to domestic head. It will be now equal to national head, and from this market price we will have to reduce NIT, which will become equal to factor cost. So by this we will calculate the value added method. Let us understand with more examples. Here I have taken a comprehensive example to make you understand the practical applicability of value added method. See, in this question, sales is given to general government by firm B. We have taken two firms here. Firm B is there and firm A is also there. Moreover, sales by firm A is directly given to you, but in case of firm B, there is sales by sales to general government and sales by firm B to households. It means that total sales of firm B will be, general government is a different sector, household is a different sector. So we will add both of these to arrive at sales. Sales by firm A is directly given to us, so value added will be this. But if there is change in stock, then it is to be considered. Moreover, if closing stock and opening stock are differently given, separately given, then we have to make adjustment for that also. So both of these things are applied in this question. Let us first calculate value added by firm A. Value added by firm A means, our formula to calculate is value of output minus intermediate consumption. For calculating value of output, we have to add sales to change in stock. So in case of firm A, sales is given to us and change in stock is also given to us. So to calculate the value added by firm A, we have added sales to change in stock, and intermediate consumption is the purchases which will be utilized as raw material, and other information related to power, fuel, etc. is not given. So we have taken purchases only as intermediate consumption. So value of output is sales plus change in stock for firm A only, that is here sales is given, and in point number 4 change in stock is given. So we have considered both of them. 500 plus 20 minus 320, that is the purchases. So value added by firm A is rupees 200. In case of firm B, if we see the data provided to us, sales by firm B to household sector and sales by firm B to general government, it is given point number 1 and 3. So total sales will be 1 plus 3. So these two are the sales items. Then change in stock is also given to us as closing stock and opening stock. We have to calculate the change in stock. So it is always equal to closing stock minus opening stock, that is 40 minus 30, that we have done here, point number 5 minus point number 6. So we arrived at 10 value, which is 40 minus 30. So regarding sales, for firm B, the information is given to us in point number 10, sales by firm A to firm B. It means that this must be the purchases by firm B, which is 200. Purchases by firm B means it becomes the raw material. Every time a firm purchases nothing but the raw material to be utilized. So let us take it as intermediate consumption here, and the value of output, that is value added by firm B, is 260 crores. When we add value added by firm A and value added by firm B, we arrive at gross value added at market price, that is 200 plus 260 is equal to 460. Further, we are required to calculate NDP at FC, that is domestic income. We have got gross value added at market price by adding the value added by both the firms, value added by A and B, that is 460 crores. Now this value is at gross. We need to arrive at net. We will deduct depreciation from this. So now gross will become equal to net. Value added will always be at domestic level. So we are not required to make any calculation in this. Further, NDP at FC is at factor cost and value added is at market price. So we will deduct NIT from this to arrive at factor cost. Moreover, in this question, depreciation is given as consumption of fixed capital. Consumption of fixed capital means depreciation. So we have taken this value 120. We need to deduct NIT from market price to arrive at factor cost. So from NIT, that is net indirect taxes, we calculate NIT by deducting subsidies from indirect taxes. But as the value of subsidies is not given to us, we will take indirect taxes directly here and we will arrive at domestic income, that is 265 crores. Further, in this question only, we are asked to calculate national income. Domestic income is with us, we have calculated that, and if we will add NFIA to this domestic income, we will arrive at national income. This I have given you for your kind information, but as the data for NFIA is not given in the question, we have to conclude it here only. But I have shown you the process of calculating national income as per the information given in the question. So from this question, as it was a comprehensive question, I hope the concept of calculating domestic income or national income from value added method is clear. In my next video, I will explain more questions related to this method. Thank you.